what is this tax tsunami we're actually talking about? And Darren, what are some ways to get around it? So my friend, as we're getting into the show today, what are some of these deferred accounts? What happens if I have a job and have a 401k, I have enough to defer in an IRA? What are these accounts? What are they? Help everyone understand what we're looking at, what we're talking about.
Absolutely, Grant. And like I said, it's a pleasure to be here with you, and I hope to educate you guys and give you some information you may not have thought about. But essentially, there's different buckets of investments that we can put our money into every year. The most popular is the 401k or 403b that you have with your employer. You also could have what's called a traditional IRA or a Roth IRA. And then there's also brokerage accounts that can be individual or a joint brokerage account with your spouse. So there's different accounts. They all can be invested the same way, but how they're taxed is what makes them different. And so today, what we're really going to focus on are those tax-deferred accounts. So what it essentially means, just like the name, you are deferring, moving taxes from today so that you can pay taxes later. Defer does not mean never pay tax. It just means, hey, this year you don't have to pay tax. So as Joe always says, tax policy is social policy. Mm-hmm. So why have these tax deferred? Why would the IRS be okay with you not paying more taxes this year? Well, the idea is that, hey, we want to incentivize you to save your money, to put your money in, which is a very good thing. But at the same time, you can't forget that just because you're kicking the can down the road, if you will, that tsunami of taxes aren't going to be coming.